Welcome, everyone. This is the Abundant Investor Podcast, and we are Beth and Christine, your hosts. We are here to show you how you can live your rich life right now with the power of an abundance mindset and tools the wealthy have used for years that are accessible to the rest of us. Things like real estate investing and using the powerful benefits of life insurance. We're so glad you're here. Now let's dive in.
Welcome back to the podcast, everybody. I'm your host, Beth Rooney. I'm here with my co-host, Christine Fisk, and today we have a really special guest for you all. We have Pamela Hilton. She is a CPA. She's a powerhouse. We're so happy to have her on the call today. And I'd like to just start off with you, Pamela. If you can give our listeners a little bit of background about yourself and your business, we'd love to hear it.
Absolutely. So again, my name is Pamela Hilton. I am a certified public accountant licensed in Massachusetts. My office is here in Haverhill, Massachusetts. I've been in business for over 30 years, 3 decades. I've been in this industry mostly in public accounting, but some private accounting. I'm a 3rd generation business owner, and I work with lots of businesses. We work primarily with businesses, anywhere from startup to multiple 7 figures. And we work with clients all over the country, really trying to get them focused on building their business, becoming more aware of their business, more dialed in, and helping them save money on taxes.
That's awesome. I love that. Since we are the Abundant Investor, can you tell us a little bit about your work with female entrepreneurs? Do you have female businesses? Can you tell us a little bit about that twist as being, I work with a lot of CPAs and there's not a lot of female CPAs. So I'd love to hear you talk a little bit about that.
Yeah. So yes, I am in what we used to be a very male dominated industry. Women are gaining more of a foothold. And we do things a lot differently at our firm. We're not a very traditional firm. We're more of a boutique firm where we cater and customize accounting and tax packages based on what our clients need. But yeah, I've been, since I graduated, and most CPAs can attest to this, once people know you start doing tax returns, you kind of become self-employed automatically. People ask you to do their tax returns. But I've been a single parent for a really long time, and it afforded me a great way to be present with my kids, which all female entrepreneurs can relate to, be present with my kids, tailor my hours, and work around their schedules. And it was really kind of a slow growth process as my kids were little. My kids are older now. My business has grown because they're more independent. But yeah, I work with all kinds of businesses, but lately I've been seeking out women's groups, women entrepreneurs, because I do feel, and I hear this all the time from clients that come in, they're not very well respected. They don't, I don't want to say it's been condescending, but I mean, it's hard for women to really make a mark sometimes. And I don't even understand why that is. But I love to work with female entrepreneurs, business owners, work with women's groups. I do speaking engagements like this and podcasts for women's groups because there's really an opportunity there to really propel more women into powerful businesses and being powerful business owners.
Oh, I love it. That is so awesome. That's right in line with what we're trying to accomplish here. It's awesome. I really love that. Thank you for taking the time to talk about that. One of the things we want to talk about, just making a little shift here, is real estate. And our audience is obviously just your regular old homeowner. So I'd love to hear about sort of the benefits of real estate as just a general homeowner. But secondarily, and maybe more specifically to our group here, is real estate investors and how real estate investing can be a tax strategy and what some of those benefits may be. So if you don't mind talking about those sort of 2 groups, that we'd love to hear your input.
Yeah. So since just from a homeowner standpoint, a lot of there was a shift, right, in the last few years from the standard deduction being raised so high that most people, I wouldn't say most, but a lot of people now are not taking the itemized deduction. They're taking a very much larger, generous standard deduction. So there's less opportunity there for write-offs. But there are other opportunities, such as if you make energy efficient improvements to your home, there's a tax credit. Not to get into the whole nitty gritty of numbers and percentages and tax rates, but there are opportunities to get tax credits for energy efficient improvements you make to your home.
That's awesome.
And then again, like the home office deduction went away. And if you're an employee, you have to be self-employed now to take the home office deduction. So just being aware of those sort of things, that some of these things are going away, but there are other things that you can take advantage of. And I really, this goes back to one of the things I say to clients all the time and to potential clients. You don't have to know all the things, because they are really, really, they change all the time, and some of them are really complex, and then some of them aren't very logical, right? The tax code is not logical sometimes. So working with somebody who is working with a professional can help you out in these sort of things, and asking, and particularly professionals are going to answer your questions. So if you are a homeowner and you may not take the itemized deduction, just ask some questions. Hey, what else is there for me to do? What kind of energy efficient improvements can I make this year that will qualify for that tax credit? And what other things can I do that maybe aren't home related, because now I don't have those deductions, can I be taking advantage of?
I love it. I love it.
Yeah. And as far as like investing, once you own like a rental property, and you guys know this, you become a business owner. And sometimes people don't think about it that way. You've got a rental property, you're collecting income and you're incurring expenses for this rental property. And that's really a business, and you have to treat it that way. And I don't think a lot of people who do real estate investing think of it as, oh, now I'm a business owner, I should really have like maybe a separate bank account for this property, and I need to keep records for this property. And that's one of the biggest things I see people make a mistake, is not having a system, not keeping track of these expenses. And it's like pulling teeth. And it's like, if you don't give me these expenses, I can't write them off, and it's more taxes you're going to pay. So
Right.
keeping that rental property or Airbnb or whatever it may be, thinking about it as a business, and keeping separate bank account and records, whether it's a spreadsheet or whatever it is, can really, in the long run, save you more money.
I love it.
I love that. Yeah, that's so good. And I would say too, as someone who is an investor with short-term rentals and constantly thinking about improving them, those seem to be great ways to also maybe offset some of the income. So continually investing and creating more equity in the asset is the way that I like to think of it. Does that sound aligned for you as well? Do you like to help? How do you think of real estate investors in terms of how they're building equity and doing things like, growing their portfolio? Are there additional incentives for doing?
Oh, sorry, I cut off a little bit, but yeah, it all goes back to the record keeping, right? If you, and like you had said, like if you're putting money into that property, you're building equity, right? You need to keep track of, again, I have another client who sold an investment property, and they didn't keep great records, and they didn't have a great prior accountant. So all of those improvements you make to that property that aren't expenses, like they put on a new roof, or you put on a deck, a driveway, any kind of major improvement you make to that property, you need to keep track of that information and the cost and the date you did that, because that goes into how you calculate either a gain or loss on your property, whether you're selling it outright or you're exchanging it for another property. That really matters. And I think those sorts of things kind of slip through the cracks. If you don't keep track of those improvements, when you made them and how much they were, you're just going to pay more in capital gains.
Yeah. Yeah. Nobody wants to do that. Nobody wants to do
No.
that. How about one exchange? Is that something that you get involved with some of your clients with?
Yes, we do here and there. It's a little complex because, as you know, when you're doing a 1031 exchange, and a 1031 exchange, for anyone out there who doesn't know it, it's just when you exchange a like property for another like property. When I say like, meaning it's a very similar property, like a two-family. You're selling a two-family, but you're purchasing another two-family, and you can defer the gain on that sale of the first property when you exchange it for another property. It's just there's still gain or loss involved, but you're deferring that to a later date when you're exchanging it for another property. And there's a lot of timing issues when you do a 1031 exchange, right? The IRS requires you to identify the property you're buying, purchase it within a certain time frame in order to qualify for that Section 1031 deferral. So we do that, but we are usually on the other end of it. We usually outsource that to another company there are companies who specialize in that and can help you identify property and make it happen within the constraints of the code so that you do qualify for it.
That makes a ton of sense. Of sense. Awesome. And what about, can you talk a little bit about the capital gains tax for just a regular homeowner? We've seen such massive growth in the value of people's homes. And what are some of the restrictions, or what are some of the maximums in terms of capital gains?
Yeah, and that's a great question. And here's another thing, most of the time, your CPA or your accountant is informed after the fact, right? Oh, hey, I sold my house this year. Yeah. And sometimes, you can't rewrite history, right? We have to just ask the questions and see if it falls into the exclusion. So in a nutshell, if you sell your primary residence, and it has to be your primary residence for 2 out of the last 5 years. So it could be a rental property here and there, but as long as you meet a certain, time, and again, a time frame constraint to qualify for this exclusion, and it's generally 2 out of the last 5 years, it was your primary residence, you get to exclude part of that capital gain. And like you said, some people have a lot of equity now, but if you are married filing jointly, the gain exclusion is $500,000. And if you're a single taxpayer, the gain exclusion is $250,000. So not to get into a lot of complicated math, but how you calculate that is your sale price, whatever your sale price is, minus how much you paid for the house, minus any, like we talked about, any home improvements that you can, kept track of. So the purchase price minus the cost, minus all of those big home improvements you made, minus the exclusion amount. So it'd be 500,000 if you're, I need a whiteboard, right? 500,000 if you're married filing joint, or 250 if you're single. Would the results, the difference would be any gain you would have to pay on that property. I would have to say most people qualify for the exclusion. Most people do, because it is a big amount. You know what I mean? 500,000 is a big amount. But again, before you close on that house, and we do this for clients, you can know what that number is, if it's gain or loss, and how much the tax is going to be before you even close, before the end of the year. So you can expect. You'll have the numbers. You won't be surprised at the end of the year when you do your tax return. So if you are selling a house, I would encourage you to talk to your CPA either before or after you close with all of those numbers, and they can calculate your gain for you ahead of time.
That's great. That's really, really great information. Thank you. That's so helpful. And I think people can be creative too about, like, if, a lot of our clients have a second home. And so maybe they, instead of, living in there for 5 months, in 3 weeks, they live there for the majority of the year, so, for 2 years before they sell it, so that they can get that exclusion. And so it's any of the past 5 years. Right.
Correct. So you could sell your primary residence and then move into I see this all the time. People have a vacation home. So you've sold your primary residence, you get your exclusion, and then you make your secondary residence, your vacation home becomes your primary residence. And you can do this And again, there's time frames that are involved, but you can do it over and over again. Yes, you can.
That makes tons of sense.
Yep.
And what about if we could just talk a little bit about life insurance? One of the things we like to do is use life insurance as a way to build a tax-free bucket. So we like to talk about these three buckets. We have a taxable bucket of investments. You have your tax-deferred bucket, like your 401k, and then you have this tax-free bucket of life insurance. And if it's properly structured and you create a high cash value, you can then borrow that money to do things like invest in real estate. And I'd just love to hear your thoughts on that a little bit.
Yeah, I think more and more I've seen clients who want alternatives, think outside the box kind of alternatives to financing, especially now that interest rates, right, have climbed. I think people are more open as long as it's explained in simple terms, because people get very nervous when they're talking about money. But having alternatives and choices for people besides just going to the bank, I think everybody is open to hear those sort of things. And yeah, I love to hear about people using these alternative methods, because it's smarter thinking. It's using things to your advantage. I myself have investments that I use for cash value to pay for college or other things, and it really makes sense. And I think that the more we can educate people on these things, because they are a little bit scary when we're talking about these unconventional, it's not really unconventional, but I think people think they're unconventional, right? As long as the more we can educate people about these and show people, hey, it's really not that difficult. You just need to file this paperwork, prepare this form, get this, filed. And then, you just, work with experienced professionals who can guide you. It takes a lot of that anxiety away from the equation, I think.
Yeah, I think that's true. And I think that's where us women really shine, is taking the time to educate folks, to make it less scary by explaining how everything works and making sure that women are heard. You said that at the very beginning. I think you said that, some of your clients sometimes feel like maybe they're not heard. And so as women in these marketplaces that could be, that tend to be more male dominated. I know in life insurance, it's only 18% of life insurance agents are female. So it's definitely improving, but it's still a male dominated business. Real estate investing, the same thing. It's still there's a lot of female real estate agents, but as far as real estate investors, we're definitely in the minority. So it's great to have resources of other female entrepreneurs that really know their stuff like you do. In that vein, can you tell us a little bit about your business? Like how you started as an entrepreneur, and how you decided being on your own was a great way to go, and maybe some of the successes or challenges you've had along the way.
Oh gosh, yeah. So I'd like to say that I planned it all out, right? But a lot of it was just kind of happenstance. I entered the accounting field because I loved one of the classes I took, and little did I know then, but it did fit in perfectly with being a single parent. I was able to make my own hours. But then again, I'm a third generation business owner. So I already had that kind of entrepreneurial mindset without realizing it. And then it just kind of took on a life of its own. And a lot of it was word of mouth. I built my practice, and I tell this to people and they laugh at me, but I built my practice. Now, again, 30 years ago, there was no internet back then. I built my business with direct mail marketing, direct mail letters. That's how I built most of my entire practice. So that's how it started. And it was a very slow progression. And again, when I started out, it was very male dominated. I remember my first job, a lot of clients wouldn't work with me unless there was a partner present. So it's come a long way. It's come a long way. And word of mouth works great. Referral groups, networking groups. I belong to the WBL, Women's Business League, which for anyone out there who's a woman entrepreneur, there's chapters all over the place. It's a great place to work with like-minded business women. But again, like we kind of carved out our own little niche. If you go onto my website, which is PamelaHiltonCPA.com, we offer like boutique pricing. We offer comprehensive monthly subscription packages for clients. We don't do things very traditionally. And I think that's what kind of sets me apart a little bit from other CPA firms.
That's it. That's awesome. Well, we got to know you through your awesome social media presence. So you've done a really nice job with that. And it's, that's really how our worlds first came in connection with each other. So could you tell our listeners, you mentioned your website, what's the best way for people to get in touch with you, Pamela? What's the best way for them to follow you?
Yeah, we do. That's the other thing. We do a lot on social media, which you wouldn't think would be our primary source of advertising and putting ourselves out there. But we are mostly on Instagram. We do share to like LinkedIn and Facebook, but our primary platform is Instagram, which is Pamela Hilton CPA. They can find us there. And we offer a lot of like tools and little tidbits in our posts and our reels every day. How the easiest way to get in touch with us is through our website. We have a, work with me or schedule a meeting button all over the place on the website. And that's really the easiest way to get in touch with us. And our consultation meeting is free. Our first consultation is free to see. We just get to know each other, what somebody's looking for, and if they're a good fit for our firm and if we're a good fit for them.
I love it. I love, just to summarize a couple of things here today. I love how you suggested that real estate investors think of themselves as business owners. That's a really good point. I think keeping records, I heard that loud and clear. Getting organized to get the biggest bang for your buck as it relates to all the improvements you're making in your properties, whether it's your primary residence or your real estate investments. So that's really awesome. And I love that hearing you talk about sort of casting a wider net in terms of what you're looking at for real estate investing or investing as in general, or how to manage your money. And one of the things that is just so great to hear is that women talking about money. This is something that we feel strongly about, Christine and I. We don't hear women talking about money enough, and we really want to change that. And this conversation today is a step in that direction. I really appreciate your time, your insight. You're so approachable, and we look forward to spending even more time with you in the future.
Yeah, absolutely. Absolutely. I love educating clients. And sometimes, people, when I do these sort of things and speaking engagements, sometimes the simplest thing makes the biggest impact. And the record keeping really does. It really does make a difference. And it's a lot of times it's not people's strong suit. And I always tell my business owners that if numbers and organization is not your strong point, that's okay. Just work to grow your business so you can outsource it to somebody who can do a really spectacular job with it.
Yeah, that makes a ton of sense. Well, thanks a lot, Pamela. Talk to you soon.
Thank you for having me. I really appreciate it.
Yeah, our pleasure.
We hope you've enjoyed this episode of the Abundant Investor Podcast and learned something new. We would love to hear from you. And if you did get something from this episode, please subscribe and rate this podcast so more people can find it and live their rich lives too. And remember, an abundant mindset means there's always plenty to go around, and through giving, we receive.